Well, we are living in interesting times. All the markets, the stock markets, the currency markets, commodity markets, what have you, everything is crashing all around us. And we thought that this would be a great time to get Asad Dossani, who, as you all are aware, is the editor and the author of the lucrative derivative report, to talk to us and give us his perspective of what's happening around the world and how he sees the future panning out, and more importantly, share with us any derivative trade ideas that he may have and which you can then profit from. So with these words, Asad, over to you, and we'll take up some questions after you made your brief presentation.
Thanks, Rahul. So the topic of today's discussion will be the global crisis and how you can profit from it. So, what's going on? Well, as I'm sure most of you are aware, markets around the world are crashing. Stock markets have seen large one-day falls around the world, in the US, in Europe, and in India. And additionally, commodity markets have crashed, commodities like energies, base metals, while other commodities like precious metals have risen in the face of safe haven demand. In the currency market, we've seen the rupee crash to quite unprecedented levels. After having traded at around 45 to the dollar, around that range for the last couple of years, it's now close to 50 to the dollar. So clearly there's something going on here. So what can we expect given the markets and what they're doing? Well, the markets are crashing primarily because they expect a slowdown to occur. The slowdown will be global. It's affecting the US primarily, as well as Europe due to their debt worries. And India as well is seeing a slowdown as growth rates have been falling over the last year. From the perspective of the government, what else can we expect? Well, we can expect monetary policy to be loose. Central banks continue to keep interest rates very low. Additionally, the US Fed just came out with an Operation Twist, which is a milder version of quantitative easing, if we like to call it that. And some central banks are on the other fence. The RBI, for example, keeps raising rates, but that may stop given that the economy looks like it may slow down. And on the other side, we'll see fiscal policy contract due to the large debt burdens created in many countries, particularly in Europe. We will see less government spending, and this could also create further slowdown in the economy. But the important thing to remember is that every crisis presents us with an opportunity. In fact, when markets move fast and they move in an irrational way sometimes, this provides us with very good trading opportunities. So in the currency markets, as I discussed, the rupee has fallen heavily due to stock market falls and increased safe haven demand. And what can we expect in terms of the rupee going forward? Well, as long as India's fundamentals remain good, we should expect to see the rupee come back once the global crisis calms down. So a lot of the rupee selling has been due to panic stock market falls and due to safe haven demand for the yen and the dollar. So once the storm calms down, which it eventually will, stock markets cannot fall forever, we should see some good buying opportunities for the rupee, particularly given the way it's fallen in the last month. In the commodity space, there have also been large movements and as a result, plenty of trading opportunities. As we discussed, bar gold and silver, nearly all commodities have seen large falls. So for commodities like crude oil, the outlook is fairly positive because the falls have been quite large, and many of the same constraints that drove crude oil prices so high a couple of years ago, like supply constraints and still growing demand from India and China, will continue to keep crude oil positive. So that's a good trading opportunity. And turning to the outlook for gold and silver, they could also likely move higher if the crisis continues. However, I would say the short-term outlook is fairly poor, given that we have seen such large rises. In fact, if we look at the last few days, when the stock markets fell, normally what was happening was that gold and silver was rising due to safe haven demand, but this time they've actually been falling, which kind of means that in the near term it's exhausted its run. But of course, if things stay poor, then in the medium to longer term, we could see higher prices. But the bottom line is that there are plenty of good trading opportunities, and we should always look at every crisis as an opportunity, and that's what we'll do. So that ends my part of the presentation. I'll turn over to Rahul for some questions.
Yeah. So, Asad, a couple of very interesting points that you've spoken about. But before we get into that, could you, for the benefit of the listeners, just dwell a bit on what is safe haven demand?
Yeah, so safe haven demand essentially exists when people are worried, people are scared. So when stock market is falling, then we get safe haven demand. Safe haven assets are assets that are proven to do well when things go bad. So gold is one of the main beneficiaries of safe haven demand. The dollar is one of the main safe haven demand, as well as the yen. And sometimes this can seem a little illogical because you'll have bad news coming about on the US economy, yet you'll see the US dollar rise. And this may seem a little strange, but this is actually people buying dollars because they feel that there's no other currency that's as safe as dollars.
So what people are effectively doing is that, say, a US fund is invested in India, but because of the global crisis, they're liquidating a position in India, converting the rupees back to dollars so that they can take it home. And the money is closer to them, then they probably feel safe. They're in a more known currency. They understand the risks better as against being in a market like India or a Brazil or a European country.
Yeah, that's exactly right. The main reason the rupee has fallen is due to foreign outflows. And the reason this exists is because you have a lot of foreigners investing in the Indian market, but you don't have it the other way around. You don't have that many Indians invested in foreign markets. Okay. So as a result, when foreign markets fall, it's not a case that there's money coming back to rupees.
So the unwinding is happening only one way, where money moves out of India.
Exactly.
Okay.
Exactly.
Okay. Now coming to the trading ideas, broadly you've spoken of three. You've spoken about the rupee, which you said could be probably oversold because of the crisis, and given India's fundamentals over time, it could do better, and that could be an opportunity. So when you look at the rupee, are you willing to take a call on what kind of timelines you see rationality returning?
I think, unfortunately, this is the most difficult point because to know when the markets will come down is difficult. But I do feel that the stock markets have fallen quite significantly. I think there's not a whole lot of room for further falls. So I would think within the next month or so, we should see some bottoming out, perhaps. And at that point, we can take advantage of these opportunities.
Okay. Just to clarify, you're referring to the rupee. The rupee could bottom out in a month.
Yeah, I think so. I think the rupee will bottom out at the same time the stock markets bottom out.
Oh, okay.
So I'm saying if stock markets keep falling, then the rupee will suffer. But at some point this will stop because at some point stocks will get cheap and people will say, you know what, I want to buy now. So at that point the rupee will benefit.
What I found surprising for you, and that brings us to the second trade, is commodities. You mentioned that oil could actually do good from here, but given the global economic slowdown, how does that fit in?
Well, I mean, certainly oil demand will fall from Western economies because they may slow down. But the fact is that those economies aren't in recession. They're just growing very, very slowly or almost not at all. So we may not see a large fall in oil demand.
Okay.
Even though India's growth has slowed down, it's still growing at 7% a year.
Okay.
China's still growing at above that. So crude oil consumption and demand, in my opinion, in the medium to longer term has only one way to go, and that's up.
Medium to long term is years. You're talking
I
about
think no. I think maybe even 1 year.
Even 1 year.
So I think I mean unless there's a really bad crisis or something, I think crude oil, the outlook is quite positive.
Yeah. Okay. And gold and silver. I think everyone was surprised with the sell-off in gold and silver in the last few days. I think the general perception is when there's a crisis, like you said, you would expect gold and silver to move up, but this time everything seems to have fallen, almost as if in sympathy. What's your take?
I think what's happened is that in the last couple of months, there's been a lot of buying of gold and silver. So it's come to the point where in the short term, nearly everyone is long. So people don't necessarily add to those positions. So there are a lot of buyers and very few sellers, which means that at some point that has to turn itself down. And I think that this crisis, what we've seen is that money's actually gone away from gold. It's gone into the dollar, and it's gone into the yen.
Yes. And I think, and of course, your view will be much appreciated on this. One reason I guess gold fell was because people were betting that Bernanke and the Fed will again do a QE3, but what they actually announced was a liquidity neutral idea. That means there's no more additional money in the system. So people were betting they'll do something stupid, and it didn't happen. So gold actually corrected.
Yeah, that's exactly right. I think sometimes predicting central bank actions can be quite difficult. And but I feel that gold and silver were probably due anyway for a correction. I mean, silver, for example, fell almost 10% in a single day, which is massive. I would say silver is far more volatile than gold is, but because everyone's been a buyer recently, so the market gets crowded out. But if things get worse, then obviously the medium to longer term outlook is more positive.
It's still positive.
Yeah.
And just for the benefit of the readers, Asad's given his views on these commodities and currency, but the specific trade idea he's only allowed to reveal in his report, which is called the Lucrative Derivative Report, because he has a lot of subscribers, and they are they have a right to his opinion actually in many senses. So the broader idea he shared with us, and thank you for that, Asad. That takes us to the disclaimer, which is the most important point of the presentation. So please ensure you go through the disclaimer. It's very critical. You could actually pause it on your screen and read it completely. And finally, like I mentioned, that Asad's views are reserved almost exclusively for the Lucrative Derivative Report members. And like we did in August beginning when Asad was with us, when the S&P first downgraded the US, we had a emergency video with him, and which was received very well. We had like 10,000 people view it. We've again convinced Asad to allow us to do this, and that is taken new members into the Lucrative Derivative Report at really a one-time special offer where you can get a half off, a 50% discount on the usual selling price. So make the most of this opportunity. Like Asad's explained in his presentation, there are trading ideas out there which you can profit from, make money from, even as the whole world seems to be falling apart. But like all good things, this is not an unlimited or indefinite offer. It's available only for the next 24 hours. So I strongly recommend you consider it. Read the promotion in detail just to be sure that it suits you, you're open to the risk that it entails. And then if you find it fit, go right ahead and sign up. This is a fantastic opportunity. With these words, Asad, would you like to say anything in conclusion?
Yeah, just to conclude, I would say that it's important not to get too worried when markets crash. Effectively, things are just becoming cheaper, so it's not that bad. And there are always trading opportunities to be found.
Great. So with these words, we'll sign off. Thank you all for joining us, and we look forward to interacting with you again, hopefully in much better times. Thank you.